Thanks, Sam. I think another important aspect of what Sam's doing is kind of cool is agency. So one of the challenge often when you look at these types of employee scenarios, you have a third party as well, like a benefits provider. And agency is important. It needs to be clear to the employee that the insurer, the benefits provider, is acting on behalf of the employee and not the employer. Now, for sure, this is the way it really works, but it's not always clear to the employee that this agency exists. And so making it clear to the user who they have a duty to, the insurer is actually there to serve the employee is important. Also, there's sometimes your relationship with your employer continues on after you cease to be an employee. When you get retired, as an example, sometimes if you're downsized or you leave the organization, you continue to get benefits for up to 6 months after you leave. So being able to continue to have a credential relationship with your provider after your employer after you go is actually really quite important. So I want to switch cases now to another really important example, and this case is about Sun Life. Sun Life is, as you all know, provides group benefits. They also provide investment products, and they do insurance products as well. And so they have a whole field of people who are out collecting information from customers to get them into the service. And they have a whole set of logistical issues that need to be addressed. So I'd like to invite Jim Skipper to come up and talk about what they're doing. Jim.
Thank you very much. Okay, I have to ask you guys, because this is what got us to really drink the Kool-Aid. How many of you have had to take out a townhouse registration or have rented a townhouse in the last year? I can't believe it's that few, because my kids are in second year university, so they obviously decided they wanted to live in a townhouse on their second year. It is absolutely brutal how much information you have to give them. You have to give them your social insurance numbers, not just for you, but for the kids. You have to give them all your banking information. You have to give them your driver's licenses. And this is for all the other people, all the other parents of all the other kids that were going to be living with them. What's worse about that is it's all paper-based, and it's sitting in the superintendent's townhouse to be stolen. So that example you gave last week in the media can happen to every one of us. Well, the same kind of scenario exists when you're trying to take out life insurance or you're enrolling in your payment program at your particular employer that you do business with. Because there is so much information that we are required to collect because we're regulated to the nth degree. So you have to provide us virtually every piece of financial information about you in order for us to actually take on your business. Why? Because it's the regulator's way of making sure that we are actually truly selling you the policy that's right for you, and that the advisor or salesman or financial advisor isn't selling you the product they're making the most commission on this week. So that can happen. If they're making the most commission this week from Uber Insurance Industries, then it just so happens Uber has the best policy. So that's what the regulators are all about, and that's why it is so intimidating for you, the client, the individual, when you're trying to enter into a business relationship with a financial services company. It can take up to 90 minutes to collect all of that information. And it can actually be required to take place over multiple days, because chances are you've even forgotten half of the information that somebody like Equifax actually has on file for you. So let's go through this video. You know who we are, so I didn't really read out all the information, but probably what's most important is we were actually rated by Forrester as being #1 in our mobile experience this year across all financial service organizations in Canada. So we're not a nobody when it comes to our ability to handle knowledge and information. And I already talked about the KYCs, so we can head right into the video, because that's what's probably most exciting. So here we are. Not to have a conflict of interest, we called ourselves Moon Financial. Sun, moon, got it? You know, it's whatever happens. So here we are going through the information, and we're saying, would you like us to collect all of this information from first principles for 90 minutes? Or would you like to use Verify Me from SecureKey? Obviously, the person decides, let's use the Verify Me application. It goes through and asks what bank you're from. so we can go out and take a look at the information. You as the client can then decide, is this all the information you're willing to share with Sun Life for the purposes of underwriting or validating who you are and your credit line that you would have available to us? You select the Verify Me application, you do all the same work you've seen in the last few demos, and bang, there it is. You've actually registered for the business that you want to have with Sun Life. That's onboarding. But there are far more useful applications that we are looking at as the ecosystem evolves. Probably the one that is most interesting is coordination of benefits. And I'm sure the government of BC that spoke earlier can relate to this as well. Or if you're from Toronto, the Toronto Transit Commission can relate to this because they just sued Manulife. There's a lot of situations where a client has two spouses insured by different individuals, and they go to the dentist, and rather than collecting 80% of the benefit from one and 20% of the benefit from the other, they collect 80 and 80. So they're actually making an income off of going to the dentist. That's a problem for us. There are controls in place. The controls tend to be weak, and it happens a lot. It happens so much that the Toronto Transit Commission actually, this was only 3 months ago, had 170 employees that had started their own little fraud ring, where what they would actually do is a person would go to the dentist and they'd share that dentist claim among 7 other people, so there were 7 claims for the same dentist. And then you'd continue to echo the process. If this ecosystem evolves, we will be able to know that you are Fred, you saw dentist George, and there should only be at maximum 2 claims for that service that George rendered. 180% to one, 120% for the other. So we definitely have drank the Kool-Aid. We have lots of opportunities, both in terms of making the client experience better, but equally important in terms of reducing our unit costs and end up actually reimbursing the clients that do business with us. So we're excited.